In a bold move signaling a deepening commitment to the cryptocurrency market, the Trump Media and Technology Group TMTG is reportedly planning to raise $3 billion to invest in digital currencies including Bitcoin. This strategic initiative comes amidst a broader trend of increasing corporate interest in cryptocurrencies as companies seek to capitalize on the market's volatility and potential for high returns. The proposed capital raise is structured to include $2 billion in fresh equity and an additional $1 billion through a convertible bond, according to sources familiar with the matter. TMTG, which operates the Truth Social app and is under the control of Donald Trump's family, may officially announce the fundraising during the upcoming Bitcoin 2025 conference in Las Vegas. High-profile attendees expected to speak at the event include Vice President J.D. Vance and Trump's sons Donald Jr. and Eric, alongside the company's cryptocurrency strategist, David Sachs. While the specifics of the offering, such as terms, timing, and size, are still subject to change, insiders indicate that strong investor demand has prompted an increase in the fundraising target in recent weeks. TMTG's statement on the Financial Times report dismissed the claims as unsubstantiated, reflecting the often contentious nature of media interactions surrounding Trump's enterprises. This venture marks the latest chapter in the Trump family's growing involvement in the cryptocurrency space, which has raised eyebrows regarding potential conflicts of interest. Donald Trump himself has expressed a desire for the United States to become the crypto capital of the world, a stance that could influence regulatory attitudes and market dynamics during his administration. The price of Bitcoin recently hit a record high of $109,000, underscoring the lucrative prospects that have drawn many investors into the crypto market. TMTG's capital-raising strategy mirrors that of MicroStrategy, a software firm that has successfully accumulated a massive Bitcoin holding through various equity and debt offerings. As TMTG plans to operate with at-the-market terms, shares are expected to be sold near their closing price, which recently stood at $25.72, valuing the company at nearly $6 billion. In addition to its immediate fundraising efforts, TMTG has aspirations to launch a cryptocurrency-focused financial services platform and an exchange-traded fund ETF. The company aims to partner with Crypto.com to facilitate these initiatives, which would further integrate it into the burgeoning digital asset ecosystem. Earlier this year, Trump hosted a gala dinner for top investors in his memecoin, further indicating the family's active engagement in cryptocurrency investments. Trump's influence in the crypto sector is part of a larger trend where public companies are increasingly adding cryptocurrencies to their balance sheets, inspired by the playbook of firms like MicroStrategy. Recent deals such as Ripple's acquisition of a prime brokerage with a focus on digital currencies highlight the institutional interest that is expected to grow under the current administration. As the landscape of cryptocurrency continues to evolve, TMTG's ambitious plans may pave the way for future developments in both the digital asset market and the regulatory environment surrounding it. The coming weeks will be pivotal as both the crypto community and investors watch closely to see how these initiatives unfold and what impact they may have on the broader market. In a bold move signaling a significant bet on the future of digital assets, the Trump Media and Technology Group TMTG, controlled by Donald Trump's family, plans to raise $3 billion aimed at investing in cryptocurrencies including Bitcoin. This initiative comes as the cryptocurrency market experiences a resurgence, with Bitcoin recently reaching a record high of over $109,000, inspiring a wave of interest from both retail and institutional investors alike. According to sources familiar with the plans, TMTG intends to secure $2 billion in new equity and an additional $1 billion through a convertible bond. The announcement of this capital raise is expected to coincide with the upcoming Bitcoin 2025 conference in Las Vegas, where prominent figures such as Trump's sons Donald Jr. and Eric, as well as Vice President J.D. Vance, are set to speak. This event is poised to be a major gathering for crypto advocates and investors, potentially amplifying the visibility of TMTG's plans. The company has not only focused on cryptocurrencies but has also expressed ambitions to launch a financial services platform dedicated to digital assets, which may include cryptocurrency exchange-traded funds ETFs. This aligns with a broader trend among public corporations adopting cryptocurrency into their balance sheets, a strategy popularized by firms like MicroStrategy, whose market value has soared to over $100 billion by leveraging debt and equity to acquire significant amounts of Bitcoin. TMTG's foray into the crypto space has raised eyebrows, particularly regarding potential conflicts of interest given Donald Trump's outspoken support for making the United States the crypto capital of the world. The president's administration has been vocal in its advocacy for cryptocurrencies, further fueling the interest from investors and businesses looking to capitalize on the digital currency boom. Industry executives suggest that TMTG's strategy mirrors that of other major players in the cryptocurrency market, reflecting a growing trend of traditional finance firms engaging with crypto assets. Notably, the latest surge in Bitcoin's price has been attributed to increasing confidence among investors, which has been further bolstered by endorsements from influential figures in finance. For instance, JP Morgan's CEO Jamie Dimon recently announced that the bank would allow clients to purchase Bitcoin, signaling a shift in perspective that could have far-reaching implications for the market. Despite the ambitious plans put forth by TMTG, the company has encountered skepticism regarding its announcement. In response to the Financial Times report, TMTG issued a statement dismissing the article's credibility while declining to provide further comment. This lack of clarity has not deterred market speculation, as demand for the offering appears to have surged, leading to an increase in the anticipated size of the capital raise. As TMTG prepares to unveil its plans at the Bitcoin 2025 event, the implications of its cryptocurrency investment strategy will likely set the tone for the future of digital assets in the corporate sphere. With a growing roster of firms exploring similar ventures, the landscape of cryptocurrency investment is rapidly evolving, and TMTG's actions could serve as a barometer for the broader market's trajectory. As the cryptocurrency sector continues to attract attention from mainstream finance, all eyes will be on how TMTG navigates the complexities of this volatile space while potentially reshaping its financial future. In a bold move that intertwines politics with growing interest in the cryptocurrency market, the Trump Media and Technology Group TMTG has announced plans to raise $3 billion to invest in cryptocurrencies, including Bitcoin. This venture is seen as a strategic bet on the burgeoning digital asset landscape, which has garnered both fervent support and skepticism in recent months. According to sources familiar with the matter, TMTG, which operates the social media platform Truth Social and is controlled by former President Donald Trump's family, intends to raise $2 billion through fresh equity and an additional $1 billion via a convertible bond. This capital raise is anticipated to be unveiled during the upcoming Bitcoin 2025 conference in Las Vegas, where key figures associated with TMTG, including Trump's sons Donald Jr. and Eric, and the company's crypto advisor David Sachs, are scheduled to speak. The announcement comes at a time when the cryptocurrency market is witnessing a resurgence, with Bitcoin recently reaching a staggering record high of $109,000. Trump's administration has actively promoted the idea of making the United States the crypto capital of the world, which has sparked concerns over potential conflicts of interest. Critics argue that Trump's financial interests could influence his policy decisions, particularly as he has introduced measures aimed at deregulating the crypto space. TMTG's approach mirrors strategies employed by companies like MicroStrategy, which has successfully utilized debt and equity to amass significant Bitcoin holdings. TMTG's shares, which closed at $25.72, reflect a market valuation of nearly $6 billion, indicating strong investor interest in the company's plans. The forthcoming capital raise has reportedly been increased in size due to high demand, further emphasizing the enthusiasm surrounding TMTG's foray into cryptocurrency. The Trump family's involvement in the crypto sector is not limited to this new capital raise. They have previously launched a non-fungible token NFT trading card and engaged in various crypto ventures, including investments in crypto mining and stablecoin projects. Their latest initiatives also include plans for an exchange-traded fund focused on cryptocurrencies, demonstrating a comprehensive strategy to capitalize on the digital asset boom. While TMTG has publicly downplayed concerns regarding conflicts of interest, asserting that media reports have been exaggerated, the potential implications of their crypto investments cannot be overlooked. Trump's administration has already relaxed federal regulations on cryptocurrencies, a move that critics have labeled as nakedly corrupt, given the financial benefits that could flow to Trump and his family. As the cryptocurrency landscape continues to evolve, TMTG's ambitious plans signal a significant shift in how political figures engage with the digital asset market. With industry leaders anticipating a wave of similar capital raises among public companies, the coming weeks could prove pivotal for both the crypto sector and Trump's political ambitions. As interest in cryptocurrencies grows, the intersection of politics and digital finance will likely remain a topic of intense scrutiny and debate. In the ever-evolving landscape of cryptocurrency, Ethereum is making headlines once again as it breaks through critical price levels, raising questions about its future potential. As of late May 2025, Ethereum's price has surged past the $2,550 mark following a remarkable 50% gain in just a week, prompting both seasoned investors and newcomers to consider whether this is the right moment to buy into the second-largest cryptocurrency by market capitalization. Ethereum has faced significant challenges in recent years, particularly as Bitcoin often takes the spotlight with its spectacular price rallies. Bitcoin recently reached an all-time high, further widening the gap between itself and Ethereum, which remains nearly 50% below its peak from late 2021. However, recent developments suggest that the tide may be turning for Ethereum. The cryptocurrency's price has shown resilience, climbing steadily and benefiting from a combination of technical upgrades and positive market sentiment. One of the pivotal factors driving Ethereum's recent rally is the successful implementation of the Pectra upgrade, which enhances aspects of staking and usability. This is a crucial step in Ethereum's ongoing journey toward improved scalability, addressing long-standing issues related to transaction speed and gas fees. As Ethereum continues to evolve, the network remains the backbone of decentralized finance, DeFi, hosting thousands of projects and a staggering total locked value of approximately $60 billion. According to DeFi Llama, investor sentiment appears to be shifting positively, with many choosing to hold on to their Ethereum instead of placing it on centralized exchanges. Data from blockchain analytics firm Santiment indicates that only about 4.9% of Ethereum's total supply is held on exchanges, a significant drop that suggests confidence among long-term holders. This limited supply can often signal bullish momentum, as it indicates that investors do not intend to sell in the near term. Furthermore, the recent introduction of the Genius Act, a bipartisan piece of legislation aimed at establishing a regulatory framework for stablecoins, could potentially benefit Ethereum. Given that many stablecoins and decentralized finance projects operate on the Ethereum blockchain, clearer regulations may foster further growth in this ecosystem. Despite these positive developments, Ethereum is not without its skeptics. Analysts at Standard Chartered have recently revised their price forecast for Ethereum, predicting a potential rise to $4,000 by year-end, while acknowledging the scalability concerns that continue to plague the network. While these issues are valid, they overlook Ethereum's robust ecosystem and the trust that developers and users have in its functionality and reliability. Even amidst fierce competition from newer blockchains like Solana and Avalanche, Ethereum continues to hold its ground as a leading platform for decentralized applications. As Ethereum's price hovers around the critical threshold of $2,550, traders are closely monitoring the next resistance level at $2,800. Recent trading patterns indicate a bullish trend, with the cryptocurrency forming higher lows and higher highs. However, caution is warranted as Ethereum approaches this resistance level, where on-chain data suggests a concentration of investor cost basis that could trigger profit-taking and increased selling pressure. In a market characterized by volatility and uncertainty, Ethereum's ability to maintain upward momentum speaks volumes about its foundation and ongoing development. As the cryptocurrency landscape matures, projects with proven utility and strong community support like Ethereum may capture investor attention once again. For those considering a financial stake in Ethereum now, it's essential to weigh the potential for growth against the inherent risks of investing in cryptocurrencies. While Ethereum may not be the top pick for some analysts, who point to other stocks with greater short-term potential, its long-term prospects remain compelling. As the crypto market continues to evolve, Ethereum's journey will undoubtedly be one to watch in the coming months. In an era where luxury meets technology, Frank Muller has introduced a groundbreaking timepiece that is capturing the attention of both watch enthusiasts and crypto aficionados alike. The Swiss luxury watchmaker has unveiled a stunning watch priced at $24,000 that doubles as a cryptocurrency wallet, seamlessly integrating high-end horology with the fast-evolving world of digital assets. This innovative creation has sparked a frenzy among collectors and investors, serving as a significant marker of the increasing acceptance of cryptocurrency in mainstream culture. The new watch, linked to the Solana blockchain, combines the meticulous craftsmanship that Frank Muller is known for with cutting-edge technology that appeals to the crypto-savvy consumer. The timepiece allows users to securely store their digital assets, reflecting a growing trend where luxury goods are not just status symbols but also functional tools in the digital economy. As Frank Muller aptly noted, this is not just a watch, it's a portal to the future of finance. The timing of this release is particularly notable. Bitcoin recently surged past the $109,000 mark, touching an all-time high and reflecting a broader bullish sentiment across the cryptocurrency market. Ethereum, Solana, and Dogecoin also experienced significant gains, indicating a resurgence in investor confidence. The rise in cryptocurrency prices can be attributed to several factors, including increased participation from traditional financial institutions. This week, Jamie Dimon, CEO of JP Morgan, announced that the bank would allow clients to buy Bitcoin, signaling a shift in attitudes towards cryptocurrencies within the financial sector. Moreover, the recent addition of Coinbase to the S&P 500 index has further legitimized the cryptocurrency market in the eyes of institutional investors. These developments have contributed to a revitalized interest in crypto assets, with many observers suggesting that the market is entering a new phase of maturity. The intersection of luxury and technology is not just a trend but a reflection of changing consumer preferences. The Frank Muller watch is positioned perfectly to capitalize on this shift, appealing to a demographic that values both exclusivity and innovation. As the boundaries between traditional luxury goods and technological advancements continue to blur, we can expect to see more brands exploring similar integrations. Looking ahead, the implications of such innovations extend beyond the realm of luxury watches. As cryptocurrencies gain traction, the demand for secure, user-friendly solutions for managing digital assets will likely grow. This could pave the way for further collaborations between luxury brands and tech companies, potentially revolutionizing how consumers engage with both sectors. In conclusion, Frank Muller's $24,000 Solana timepiece is more than just a watch. It represents a convergence of luxury and technology, embodying the spirit of a new financial era. As the cryptocurrency market continues to evolve and gain legitimacy, it will be fascinating to observe how other brands respond and what new innovations will emerge in this dynamic landscape.